Hey everybody, welcome back. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, coming to you from the live options room today. We're going to talk a little bit about what's going on in the market. We'll look at some index charts, some of the big mags, and I have a list of buy setups, long setups that are setting up. I want to talk a little bit too today about how to determine levels of supply, levels of demand. If you can map those out, then you've got a pretty good place of buying when stocks dip into those levels, and pretty good place of selling when stocks rise up to those levels. So anyway, we'll talk about that in just a minute. And I need to keep it fairly short today. I apologize, won't be able to take chart requests because the market is just moving too much, and I need to get back on the trading floor. So hey, if you want to join me and the great group of traders in the live options room, you go over to drstoxx.com. That's drstoxx.com. Click the subscribe menu, go down to the live options room, and you can add on our flagship room, the live trading room, at a 40% discount once you subscribe to the options room. Okay, now we're going to go to charts. We're going to start with some indexes. Let's take a look first of all at the S&P. And I've been saying this on social media boards, StockTwits and Twitter and LinkedIn, that the S&P has been in a tight, trendless base. This is a bullish base because it's at the top of an uptrend. It's just the market's way of consolidating prices, allowing valuations to catch up to prices, and it's a good, positive thing. But it can make trading day to day very difficult. You get into a position, it's up one day, down the next, up one day, down the next. It looks like it's going to break out. It peaks over some range highs, and then it's right back down to the lows, and vice versa. So that's trading in a tight trading range, and this is about as tight of a trading range as you're going to get. I mean, I really am serious about that. Typically, when you get a trading range, you get something more like this, right? You kind of wavy up and down, without much in the way of upside movement or downside movement, but you get some pretty good multiple days in a row where you're going up and multiple days in a row where you're going down. That's not what we have here. We have really tight little mini trends and a lot of day-to-day churn, right? And you've got topping tails at the top and bottoming tails at the bottom, and just a lot of intraday movement without the market really going anywhere. And we've been in that mode for about 5 weeks now. We are kind of peaking out of it, although I think I would need to raise my range perhaps a little bit there to incorporate this latest couple of days. We had two really good days. So this is a Wednesday. It is the 10th of September. Monday up, Tuesday up, Wednesday gapped up, but we're kind of right now in a trend down day, especially if you take the overnight data. The overnight data was very strong for a number of reasons, right? Mainly because Oracle came out with this amazing earnings report. It totally unexpected that they were going to do that well, and they just blew it out of the park, rallied 30%, and that brought up all the AI sympathy plays and some of the software names as well. So you got that going on, right? So tech is doing pretty well, but it has a lot of it's been coming back down as we go through the rest of the day. And here's the reason why. Tomorrow we get CPI. CPI is a consumer, the price index for consumers. We had PPI out today, which is the price index for wholesalers or companies that are buying stuff, and that was way below expectation. I mean, really, really low. It was a negative number, in fact. So prices are falling for producers, but that won't reflect on tomorrow's CPIs. Tomorrow's CPI, I have a feeling, is going to be pretty hot. Why? Because last month the PPI was very hot. It came in above expectations, in fact, way above expectations. And PPI is a trickle-down effect. So whatever the producers were paying last month will be reflected in consumer prices this month. So I think we're going to get a hot CPI, but maybe not hotter than expected. So if it's in line, I think the market will be okay. But if it's anywhere above that level, just even 0.1%, I think you're going to see some continued sell-off. We're also pretty set up here in the indexes and the major stocks like Apple and so on. Microsoft still not doing very well. Tesla looks like it's topped out. So we're starting to see some major stocks cool off a little bit. And that usually means that the rest of the market will also be cooling off and the indexes will come in a little bit. Next week, we get FOMC. Powell's going to come out. He's going to cut at least 25, maybe 50 basis points. He's going to hint at least one more, if not two, cuts before the end of the year. I think the market will like that. And I think whatever little pullback we have this week heading into that event will get bought back right after Powell gets through with his presser or perhaps the next day. That's often how it happens, right? When Powell's out there, the market gets kind of scared and confused. And, you know, he says one little thing over here that's hawkish and another thing over here that's dovish. And then the market just doesn't know what to do with that. But overnight, things kind of calm down and the talking heads come out and they give us their prognostications. And then the market gets back on track the next day. So I'm thinking 17th, 18th next week should be a good time to start getting heavy long again. But right now we're cautious. We're cautious. We're starting to put on some bearish positions. We're trying to take profits off the table. Any new position on the long side has been small, right? We're going with half position size or even a quarter position size rather than full because we're really expecting a little bit, just a little bit of volatility. Okay, so the S&P, bottom line is tight trading range. It looks like it wants to break out today, but I don't think today's the day. Probably see a couple of days of coming back in off the CPI tomorrow into the Fed. It's pretty much the same story for the Nasdaq. Only we don't have such a tight range. We have quite a wider range in the Nasdaq. And the bearish thing that's going on in the Nasdaq is we've got this double top that has formed as of today. Now, we have the two tops. What we don't have is a break of the fulcrum. So it's not a pure double top pattern until it gets down below this pivot low. I would say that's the fulcrum right there, right? It's got to get down below that level. And of course, we're not there yet. We're way up here. But let's just see if there's any bearish divergence on that second top. I haven't checked this yet. So I put on my bearish. There it is. Yep. There's a little bit, right? There is one of the 9 or 10 indicators in this indicator. And by the way, this is a good one to put on your charts. Bullish and bearish divergence typically is a short-term signal. So it's not something that you can just, you know, I'm going to load up on every bullish divergence signal. No, it's usually just for a few days, but it is worth noting, especially if you're long and you get bearish divergence at a top, it's time to start trimming back on some positions. And that's what we've got here in the NASDAQ. That's the volume-weighted moving, volume-weighted MACD indicator. So not a major indicator, but it is, and it's kind of a lagging indicator, but it's worth noting that there is bearish divergence there in at least that indicator. And if we get a lower print tomorrow, then you'll start to see other indicators pile on, right? You'll probably see RSI and OBV and stochastics, because those will not print a divergence signal until you get an official pivot point there in the chart. We don't have that yet. Okay, so NASDAQ, possible double top for all the same reasons. The S&P is likely to cool off going into FOMC next week. The NASDAQ is going to do the same thing. Small caps are weak, along with the Dow Jones. Both of them are red today. The small cap index, for my money, has been a bit of an avoid for me. We were long TNA. We had some shares of TNA in the other room, and we were able to take a decent little profit on that. It was a short-term trade. We caught this little swing right in here, a little 3-bar swing. But right now, I think it's more about cooling off, discounting, and pulling back than adding to any longs on for the small caps. Now, the small caps will rally very sharply if and only if we get a good cut from Powell and a good hint for future cuts, because small caps love rate cuts. They love lower interest rates. So if we do get that next week, you should see the small cap index, the Russell index, do better than the other two. the other major ones. We also have a short on in the Dow Jones Industrials. In fact, in both rooms, right? We have SDow, which is the 3x bearish version ETF fund for the Dow. We have shares of that in the live trading room, and we have some puts on DIA, DIA, the diamonds, that triggered once we got below the low of yesterday. This is a rising wedge. They tend to be bearish once and only if they break down to the downside. That's kind of what's happening today. You can also see some bearish divergence working in, and it was a flush out day. So here's a good tip, really good trading tip. When you're looking at, let's say, a long pullback, 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 and then you finally get a bar at the bottom that goes way down below all the other lows of that pullback, and then rallies back up to close green on the day and within the range of the previous day, that's a reversal bar of very good significance, right? Usually those get follow through for the next several days. Not always, but they usually do. The same is true on the upside. So here's a bar, right, that went way up. New all-time highs on an intraday basis for the Dow Jones Industrials this morning. On a red day, it was at new all-time highs off the bell. And then it was all downhill from there, big red stick within the range of the previous day. And now we're pressing through the supporting trend line, and things don't look very good. Short term for the Dow, this is the worst, the most bearish of the major indexes here. So that's why we've got some bearish exposure to this index. Okay, enough for the major indexes. Let's take a quick look at the mags. We'll do these worst to best. Apple is leading the way lower. It's had a nasty move on its product reveal. And boy, if you know Apple, I mean, I've been trading Apple. I've been in long-term shares of Apple in my family fund for a long time, years and years, probably 12 years now, maybe more. And very happy with that position because it's done really well. But one thing you know as an Apple investor is that product day is very, very often a sell signal. Not always, but very often it is a sell signal. Why? I don't know. They have great products and they always seem to upgrade them. There's always something a little bit new about each one. But I guess the market is always looking for something better, or perhaps it's a sell the news event, right? They've been running up in anticipation. And then because it's nothing spectacular, they just say, hey, I'm getting out. The short term guys get out. But this is a nasty looking red stick. And this is a very bearish look right now for Apple. So you've got the gap down, you've got the loss of the 21 EMA, and then you do have a little bit of convergence right in this area. Now, yesterday in the other room, when I did my live chart chat, we were looking at Apple and the price was up here. And I was saying, you know what? I bet it's going to come back and fill the gap, hit the 21 and bounce. Well, guess what? It filled the gap, it hit the 21, and it just keeps falling. So you want to get out of Apple if you're short-term swing trading this. It looks to me like it's going to go lower. But here's some, something to watch out for. When it gets into this area, which is right around 222, 223, I think a very good thing to do would be to start adding on some long exposure to Apple for a bounce back trade to new all-time highs. It's coming. Probably mid-October, late October, we'll see a really good move in Apple, but not today. Not today's not the day to buy. Now here's the tip that I wanted to show you. I have an indicator, and this is a proprietary indicator. I'm sorry, you won't be able to use this one, but there are some other indicators like it that you can use. It's called the supply and demand indicator, and what this does is it highlights the areas of supply down below, areas of support. When price gets down into those areas of supply, a lot of shares trade hands, the declining momentum wanes, and then you start to see the potential, at least, of a reversal back higher, because a lot of folks down there are buying shares, right? They've got their limit orders down there. They're short, and so they're going to put in their buyback to close the position down there. Um, yeah, and so you've got all that going on down in this area here. This is an area where a lot of shares have traded hands, and typically that means an area of support. That's an area of strong supply. And you can see last time it got into this area, it bounced very nicely up to new all-time highs. And we're just about there again. So I still think it's going to hit at least the 200 period moving average. The downward momentum is very strong. But if it starts getting into 225, 224, and you see some reversal going on, some bullish stuff going on, that might be it. That might be it for the pullback. Okay, so supply and demand. Supply down below, demand up above. There is no demand zone until we get all the way up here to 247. So that's something to watch out for if Apple gets that high. Amazon is the second worst, and it's a big red stick. We were long Amazon some calls in the option room. I don't think we've been long shares for a while in the other room, and I'm forgetting how that trade worked out. I'm hoping that we took a profit, but we weren't in it today, so that's good news, because if we were if we weren't it last week, then it's already now below our exit. So again, same principle here, but look, the supply zone is way down here, way down by the 200 period moving average. It is going to be a long time before it gets there. You've got the 21 nearby, you've got the 50 rising, you've got the pink zone of the LRC, that's a 2.0 standard deviation. So, and you know what, if we drill down to something like the 2-hour chart, we might be able to pick up, yeah, here we go. So here's a higher supply box at around 222. That might be a more realistic place for the price to come into. We'll have to see how that plays out. Okay, let me just do Microsoft and Tesla, because I really do think we are close. Microsoft has just been ugly for about a month and a half, and I'm not exactly sure why. Google got a big boost on the dropping of the antitrust legislation or antitrust lawsuit, and the same happened briefly with Apple, but Microsoft has not, it just hasn't caught a break, and right now it's printing another little bear flag. So here's a little bear flag. Here's a bear flag. By bear flag, I mean these little weak rallies back up after hitting new lows, rally back up weekly, and then back down again for a new leg lower. And to me, that looks like that's where it's going to go. So it's a no-go zone for now. We do have some bullish divergence working in, but as I said, that's a short-term indicator that might have already played out. The next path of least resistance is going to be a test of that supporting trend line down there, and that could get all the way down to 480 or so. I don't hope it goes there. I really do think we're close to a major buy point with Microsoft. It's just not showing us that in the chart, and until I see it in the chart, I'm not interested. Okay, Tesla has been good. It's been actually quite good. The only thing is it's got a resistance trend line up here. It's got a very thick, and this dark red means very strong demand zone. I'm sorry, supply zone up there, which is resistance. And I think it's not going to get up above that. It's not going to get up above this resistance trend line until we get past FOMC. I frankly want to get long Tesla after the FOMC as a swing trade. I'm long Tesla long term in the family fund. Would like to do a swing trade in this one, but I would like to see it close this gap. So I want to see it come down to about maybe 339 or so, 338. We are long AMD, and it's doing pretty well today, but it is a gap and crap like a lot of major stocks today. The good news is that it's still above the resistance trend line, and it's still well above our entry price yesterday. And so that's all good news. It's just that it's not doing what we would hope it to do today. And it may not until we get past FOMC next week. So I could see it closing the gap. We're still above our entry at that point, and then starting to reverse, heading into FOMC as anticipation. So Nvidia, kind of the same story. A big gap up today. It hasn't held the highs of the day, and you can see there's a little supply box up there that probably got came into play. But good news is we're above the 50, we're above the 21, 21 starting to tail higher, and we've cleared a lot of the range highs. So NVIDIA looks a lot better today than it did yesterday. We're long NVIDIA. I think we're long calls in the live options room, and we're long a covered call, which is part of a wheel that we're doing. We're doing a wheel play with NVDL in the live trading room. We're long in both rooms, and yeah, you got to be long NVIDIA when it dips all the way down there like that. Okay, Oracle is a big story of the day, however, 33.75% above the open, even. This is a power gap. Typically, power gaps on earnings are a revaluation of the company. You don't usually see those earnings gaps fill in. They act as support. So we can kind of play off that level. If it gets back down to, what is the level here, 312, then yeah, you could start to dip by there. I wouldn't buy it here. It's probably just going to be dead money for a while when it gets up to the highs of the range. But when it dips down to the lows, it should start to bounce back. You can catch a 10 to 12 point move pretty easily there. All right, the last thing I want to do, and then I'm going to let you go, is to look at a few stocks on my greens list. So I keep all kinds of lists of trades. So I've got the major. I have a whole list. Let me show you my list here. I've got all the major sector ETFs, and then the top 10 stocks of those ETF funds I list underneath those. So hey, if I think the energy is going to have a great couple of weeks, I go to my energy list and I look at the top 10 energy names and I discern, chart analysis and all of that, which are the best ones to buy. If I think the communications is going to have a weak month, I'll look at, there's Google, there's a Netflix, and so on in that group. And that's one thing I do for watch lists. The other thing is I keep a long list of what I call charts of interest, and these come from all kinds of sources. My market surge scanners that I have programmed into the software, and I share those in a lot of YouTube videos. If you're a market surge user, then go to my YouTube channel, Dr. Stoxx, DrStoxx, and you'll find some videos there on how to build really, really great, strong stock scanners in market surge. And it's a great tool. It's the most robust scanning tool. And then you've got access to all the IBD metrics that are amazing. And if you want to try that product for cheap, less than $1 a day for 2 months, then let me know in the room and I'll give you a link. I also do have some FinViz scanners. I am a member of a pro trading group. We share trading ideas off of each other throughout the trading day. I'm not there very often, but I do hang out in their Discord room for a little bit and get some trading ideas usually, and I share my ideas with them. And then I, on Twitter and StockTwits, I follow a very select group of people whose analysis I really like and tends to agree with me. I guess that's what we all do, right? You look for folks that tend to agree with you, but also I'm looking for folks that have really good track records, and I follow them and get some advice there. So all of those stocks go onto this list, charts of interest. And I whittle through these because a lot of them maybe are stocks I wouldn't even trade. And if I'm not going to trade it, it's not going to be on my list. But that's where I kind of start. And then I go through these and I say, hey, this has got a bullish base breakout forming. This has got a pullback setup forming. This has got a, running into resistance potential short forming. And so I label them either green or red. And then I get this list of greens, and I don't have many reds right now, but I have a few. But let me show you my list of greens. Okay, so this is a shorter list than the charts of interest, but in fact, with the market being what it is, we've had some really nice pullback setups, which is my favorite of all the setups. You can trade breakouts, you can trade consolidation patterns, or you can trade pullbacks to support in anticipation of a bounce. Those are the three basic kind of setups for trading, and I like the pullback the best. Patterns second best, and breakouts third. Sometimes everything is just going up and up and up, and you have to trade breakouts because there aren't any pullbacks. Okay, so worst stock on the list is RBRK. I don't know why it's down so much. I don't really know too much about this, although it is thrown around as an AI name. I think Dan Ives likes it a lot. But big gap down today, big red stick, huge volume. Now here's the deal with this one. It came down into a modest. This is not a strong because it's kind of grayish, right? It has to be really dark green to be a strong supply box, but it came into a supply box. The last time it got into this box, it rallied quite sharply, nicely off of that, and we hit it again today and bounced up a little bit. So there may be a bounce potential here. But when you have a big red stick like that, you can't buy it that day. You got to let it settle down. It probably will take 2, 3, 4 days to form a little bit of a mini bottom down there, and then you can start to trade. But let's keep that one on the watch list. This is a classic stock. LMND is an insurance play, disruptor insurance play, and it's a fun stock to trade because it's got a lot of shorts in it and a small float, so it can really move. It can really squeeze like it did right here in just a couple of days. Right? You can get a 30-40% move if you're using calls in a very short period of time. And 2 days ago, Monday, I thought this was the beginning of a new squeeze move. Sure looked like it, right? So I said on all the boards, I said in both rooms, hey, let's watch this one. Let's see if it's tradable. And then the next day, it kind of did this little gap and crap move, not a follow through day at all. And today, it's just been all downhill. So I'm glad we didn't get into this trade. But here's a great example of one that can look great on one day and really suck the next day. There's no volume shelf down there underneath unless we drill down to like the 2-hour chart. Let's see if there's anything down there. Yeah, there's a little bit of one here. A little bit of a, I don't even know what color that is. But it's a gray box. And we're still above it. We are still holding that resistance trend line down there at the bottom. So if and only if this pullback coincided with both the trend line and a support box, I might consider nibbling on some shares because I do think that given the way the market has been, you're going to see a lot of stocks like this that are up one day and down the next. This is a down day, so tomorrow, up day, right? We'll see about that. I'm not buying shares, at least not yet. We did get long VSAT over in the other room. We just have a small lotto share trade on it. It had the reversal off the 21 period moving average. It had a follow through day yesterday. That's what got us in, right? Technical analysis 101. You get the bounce, you get the follow through, you join. And it is reversal today with a lot of other stocks as well. So it's still above our stop. We're still in, but we'll see where that goes. Rocket Lab, we are in a wheel play with this one. We're in our 5th week, I think, now. We've made full profits every week. It's been a good play for us. We are in now covered calls, and we need to get Rocket Lab up above 47, or am I thinking of something else? Anyway, it doesn't matter. It's not exactly where we would want it, but it's only Wednesday. We can still get out to Friday, and in any case, we'll see where that's at. So with a wheel play, you sell a put on a chart that you really like, a stock you don't mind owning shares of. And then when you get put shares, if you get put shares, you just sell puts every week until you get put shares. You sell calls against the shares, and you keep selling calls until you get called away. And then when you get called away, you go back to selling puts. And it's a premium income play. And sometimes you make a little money on the shares as well. And if you find a good stock that has enough volatility to pump up the premium, but not too much volatility to get you into trouble on the put rights, then it's a good strategy. I think this is pretty good for that one. All right, let's take a look at some of the stronger stocks. So I have shares of CRWV. It's way off. It was up here at 125. Now it's down to 115, but I think it's probably going to be okay for a hold. I'll just move up the stop. We were in IREN shares over in the other room. We had a really nice pop. So we bought it down here at 26 something, and we got out at around 32.50 or so, and it's a little bit higher than that now. I'm hoping to get back in on a test of 30, so we'll see if that comes back down. Reddit. So we were in Reddit calls, and I got out too soon. We did take a profit, but I got out too soon. Look at this big update. Now, here's another tip. Rounded bottom, when you have a pullback, right, you look for the pullback into some kind of support. Here's a volume shelf. Here's a 21 EMA, the midline of the LRC. All of those can act as support. But when you get it as a rounded bottom like this, that is bullish, 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 bullish. Now, we got out on this big bearish engulfing candle because I was thinking, maybe the market knows better than we do. That's a very bearish candlestick formation, and we better, just to be safe, get out. And then, of course, right back up the next day. But that's how it works. Google did the same thing to a lot of folks. We were in Google. I forget what we were in, but we had Google on that big gap up, and then we got out because it printed a reversal bar into strength, and then right back up the next day and right back up again today. We're long Wolf over in the options room. We have calls on this beauty, and this is a follow-on trade to NBIS. NBIS was a software play that inked a big contract with Microsoft and went way, way up and pulled up alongside it some other plays like this one. So Wolf is a sympathy play. And what's nice about this is that you went right past bearish divergence right into a volume shelf, and it's still going higher. When a lot of stocks have gapped and crapped today, this one is doing well. So let's keep an eye. Well, we don't have to keep an eye on it. We're already in it. We took profits on our TSM position today. I'm glad we did because it was a fair bit higher when we got out. It's been all downhill ever since, and it is showing some bearish divergence. So this is not a buy now, but it was a very nice trade for us, like 60% in just a couple of days. Let's see. I'll just go over this last one because I do kind of like this setup. So pullback to the 21, the pink zone just above the 50-period moving average. This is a RSI buy signal. The same friend who produces the supply-demand indicator also produces a buy and sell signal using a proprietary form of RSI. And I find that the signals aren't that great unless the buy signal comes at the end of a downtrend and the sell signal comes at the top of an uptrend. Very often you're going to get signals from his indicator somewhere. You're going to get sell signals at the bottom and you're going to get buy signals at the top. I don't know why that happens. But the ones that are at the bottom of the buy signals at the bottom of a downtrend like this one are very often very, very good signals to take. And when we look at kind of the pattern that's going on there, here's your resistance trend line over the tops of that pullback. And it's not exactly as rounded of a bottom as Reddit, but it is a roundish bottom, and today is the first day on the upside of the RTL. So I have a few shares of this one. That's kind of why I'm going over it. Maybe I'll get us into some calls. This is a nuclear play, and so it's similar to our trade. We have some Oklo, which is a little bit soft today. Right there, that's Oklo, but it is on the verge of breakout. Just need to be patient. This is another nuclear play, and this one is already in breakout. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the afternoon. I'll produce the video, put a link in the main room, and then we'll get back to trading. Bye for now. God bless.